Hi, today we're going to do a quick tour of how to use the FactorWave stock screener. The stock screener is the main tool we have for finding stocks with positive exposures to the factors we want. These are the 5 major factors that we use to screen for stocks. In each case, good stocks appear on the right-hand part of each slide. Here, for example, we're limiting our search to stocks that have a quality score between the 58th percentile and the 100th percentile. As we limit the quality exposure, we can see that our corresponding exposures to the other factors have also changed. This is because high quality stocks tend to also have high momentum and low beta. Next, let's look at exactly what each factor means. The idea of a value factor is to find stocks that are cheap relative to some fundamental value for this company. Common measurements include price to earnings, price to book, or price to dividend yield. Going back to the early work of Graham and Dodd, and then made popular by Warren Buffett, the idea of buying cheap stocks, i.e. value investing, has been a popular approach. The size factor is measured by a company's market capitalization. Small capitalization stocks have tended to do better than large cap stocks. This is an important concept. While all of these factors have been shown to produce outperformance, it's also true that they work better as a team rather than individually. For example, small cap stocks with high quality are a much better bet than small cap stocks that show low quality. And this also applies to value. There's a well-known concept called the value trap, where a stock has become cheap, but is now cheap for a reason. For example, it may have diminishing earnings and poor prospects going forward. A high quality score will help to mitigate this. Quality is a composite measure that is used to find companies that are profitable, safe, growing, and have a high payout to shareholders. Momentum means a stock has good price performance relative to the rest of the market. So for example, a stock that scored above the 80th percentile in momentum means its price has outperformed 80% of the stock market. Low beta stocks are ones that have a low correlation to the overall market. These have been shown to outperform. While there is a lot more evidence that factor-based investing is a better form of diversification than the classic industry-based investing, a lot of traders still like to know or limit their industry exposure. This could be understandable for a number of reasons. Even a firm believer in the factor model may not want to get too concentrated into one sector. So that was a brief introduction to the FactorWave stock screener and the various factors that we screen over. I hope you found that helpful. In future videos, we'll be looking more at drilling down through the stocks after you've done the initial factor screening and our futures and options systems.